Monday morning, folks, and welcome to the final episode of 2023. What a year and a ride it has been, Sunil. Right from March
Absolutely.
is when we started, and we've seen just gold right from 1600 levels all the way to 2000s. And to be fair,
2100. Yeah. Mm.
2100, yes, yes. And to be fair, we did expect that, yes, eventually, when interest rates are going to peak, we are going to see this boom in gold, and it has happened to some extent, right? But
Right.
specifically with respect to last week, Sunil, we had some inflation data come out, and we did see some run up in gold. What were your key takeaways from the market movements last week?
I think the market, for me, seems to be factoring in lower interest rates and a much weaker US dollar than I expected. And so that view of a negative view towards US dollar especially is quite aggressive. You can see that in the euro, which is breached 110 against the GBP, it's breached 127. So it seems that the bets against the dollar are quite strong, and that's the one reason why gold has been so bullish, right? Against our expectation in terms of sentiment. So I think this gold rally is definitely a US dollar weakness driven kind of rally. If this remains, then we may see quite high levels in the new year, but we'll have to look at it in terms of how it goes. What do you see on a technical basis?
We started the week at around 2027, and I think
Yeah.
we've closed at about 2050. We had spoken last week that this 2050 is where we're going to see some resistance, and that's where we were up until Thursday. And on Friday, because of the weakness in the PC inflation data, which is the Fed's preferred gauge of inflation, we saw this touch right up till 2070, where the resistance is now there, and then we saw a pullback right now. What this means for gold definitely is an extension of the golden cross. Number one, you see that the green line here is the 50-day moving average, and the red line here is the 200-day moving average. Last week's rallies, and especially Friday's move up, extends that golden cross a little bit more. It signifies to the markets that the markets are ready to make that move upwards. We just need some more support from the Fed as well in terms of their outlook to really propel this move up. In terms of levels, as you can see, I have drawn right from the low over here to this high over here, a Fibonacci retracement, and you can see the markets perfectly playing to some of these levels right over here. So, for example, 78.6% coincides with 2074, and that's where you see a pullback on Friday. 50% coincides with 1970. That's where you see the last support that is being tested. So we can definitely use this to say that our first support, if gold corrects at the start of January, is 2018. This is where you would expect gold to bounce correct back. Let's say that suppose if the Fed has a change in outlook or there's some other changes in data that come through, right? So we're talking about a 2070 resistance going to next week, a 2100, which is the key major resistance that gold definitely has to break. And on the lower side, we're talking about a 2018 support and around a 1985 support. So this is the range
Mm.
that we're trading above. You did say about the dollar index being weak and this last week being a primarily dollar driven weakness induced gold rally. But there's a little bit of context to that as well. If you look at the dollar index here, we see that there are three supports here that the dollar index really has to break below. These are the 101, 100, and 99. And you can see that past this year, we've always seen a pullback from each of these supports right here. So I think the very key element for gold to really break out 2100 is a simultaneous decrease or break below these supports that we have in the dollar index here. We need these supports to be broken, which would facilitate the simultaneous rallies in the metal over here. That's something that we need to really happen on the fundamental side, just the way investors look at it also, apart from obviously the US economic data, the Fed, and other factors as well. Well, thanks, Sunil. This concludes our final episode for 2023. Let's brace for another power packed year. And thank you so much for also being a part of the podcast and for giving your valuable insights week in, week out. Any final thoughts from your side?
Yeah, I mean, I think you've had a fantastic run, actually, Sean. All the technical analysis has been brilliant. So I hope our viewers and customers have benefited from that, and we look forward to seeing how you perform in 2024.
Yeah, looking forward to it. Thank you, Sunil.
Thank you.